Rezolve AI PLC, trading under the ticker RZLV, is currently at $6.32, a significant intraday jump of nearly 25%. This kind of volatile movement often signals a major catalyst, and in this case, it appears to be driven by a very optimistic forward guidance announcement that has caught many on Wall Street by surprise. The expectation for a newly public AI company is typically a cash-burning, high-growth story. But the reality presented by Rezolve's latest figures suggests a much faster path to substantial recurring revenue than the market had priced in. This immediately challenges the prevailing narrative and forces a reevaluation of its potential. The market has been awash with AI-related stocks, each claiming to be the next big thing, and it's easy to become numb to the hype. Many investors, having seen countless tech companies promise the moon only to burn out, have developed a healthy skepticism. The common belief surrounding a company like Rezolve AI has been one of cautious optimism, acknowledging its presence in a high-growth sector, but remaining wary of its ability to translate that into tangible, sustainable financial results. The expectation was for steady, incremental progress, not the kind of explosive revenue growth and ambitious targets that were just announced. This is where the deeper analysis begins to diverge from the surface-level narrative. The company didn't just beat expectations, it shattered them. And that's a signal that demands closer inspection. Diving into the recent stock movement, the surge we're seeing today is a direct reaction to the company raising its 2025 guidance to a $150 million annual recurring revenue exit rate and initiating a 2026 guidance for a staggering $500 million ARR exit rate. To put that in perspective, the first-half revenue for 2025 came in at $6.3 million, which, while representing a 426% year-over-year increase, is a far cry from the newly announced targets. This has led to a massive spike in trading volume, indicating that institutional investors are taking this news very seriously. Platforms like Schwab Intelligent Portfolios and other online investment services are likely seeing a flurry of activity around RZLV, as both retail and professional investors try to get ahead of what could be a significant repricing of the stock. The high trading volume suggests that this is not just a fleeting spike, but a fundamental reevaluation of the company's prospects. It's the kind of move that can be a portfolio-defining moment for those who get it right, which is why we're seeing so much attention from users of Fidelity, Robinhood, SoFi, and even more sophisticated platforms like Interactive Brokers. Now, let's take a step back and understand what Rezolve AI actually does. The company operates in the AI-powered e-commerce space, providing a suite of tools for retailers and brands to enhance the customer experience. This includes features like geolocation-based campaign activation, data enrichment, AI-driven customer support, and frictionless checkout solutions. Essentially, they're trying to make the online and in-person shopping experience more intelligent and seamless. Their proprietary large language model is specifically designed for the retail sector, which gives them a potential edge over more generalized AI models. They count some impressive names among their over 100 enterprise customers, including Ferrero, H&M, and Urban Outfitters. This is not some startup with a theoretical product. They have a tangible offering that is being used by major players in the retail industry. Looking at their past performance, the company has had a volatile history since going public. The stock has seen significant swings, and there has been no shortage of opinions on its prospects. Just recently, there was a short report from Fuzzy Panda Research that caused a dip in the stock price, which the company has since refuted. This kind of back and forth between bulls and bears is common for high-growth tech stocks, and it creates a fertile ground for both opportunity and risk. For those who are comfortable with this level of volatility, platforms like Robinhood, with its fractional shares offering, can be an accessible way to gain exposure. However, for those who prefer a more managed approach, a service like Schwab Intelligent Portfolios might be a better fit, as it can help to diversify risk within a broader portfolio. The key takeaway from the past is that this is not a stock for the faint of heart. So, what does the future hold for Rezolve AI? The bull case is quite compelling. If the company can even come close to its stated ARR targets, the current market capitalization will look incredibly cheap in retrospect. The company's ability to secure over $90 million in ARR year to date, and the fact that the majority of this is contracted recurring revenue, provides a degree of visibility that is rare for a company at this stage. This is the kind of predictable revenue stream that investors, from individual brokerage account holders to large institutional funds, love to see. The company's recent oversubscribed $200 million financing round, anchored by returning institutional investors, is another strong vote of confidence. This suggests that the smart money believes in the long-term vision and is willing to put significant capital to work. Analyst price targets are also being revised upwards, with some now in the double digits. However, it would be irresponsible to ignore the risks. The primary risk is execution. Announcing ambitious targets is one thing, achieving them is another entirely. The company will need to continue to innovate and execute flawlessly to stay ahead of the competition. The AI space is incredibly crowded, and while Rezolve has a niche focus on retail, it will still face competition from both established tech giants and nimble startups. Another risk is the broader macroeconomic environment. If we enter a recession, consumer spending will likely decline, which could impact the retail sector and, by extension, Rezolve's customers. For investors using platforms like SoFi Invest or Fidelity, it's crucial to consider these risks and to not get caught up in the hype without doing their own due diligence. Now, I want to hear from you. Comment below and let me know if you think Rezolve AI can hit its ambitious $500 million ARR target by the end of 2026. In conclusion, the story of Rezolve AI is a classic tale of expectation versus reality. The expectation was for a promising but unproven AI company. The reality, as presented by their latest guidance, is a company that is growing at an astonishing rate and has a clear line of sight to becoming a major player in the AI-powered e-commerce space. The recent surge in the stock price is a reflection of this new reality being priced in by the market. However, the journey from here will not be a straight line up. There will be volatility, there will be challenges, and there will be moments of doubt. For those with a long-term perspective and a high tolerance for risk, Rezolve AI offers a compelling investment thesis. But for those who are more risk-averse, it may be a stock to watch from the sidelines. The key will be to monitor the company's execution against its own lofty goals. If they can continue to deliver, the reality could end up exceeding even the most optimistic of current expectations.